Imagine waking up in 2026. You have no stocks, no crypto, no savings plan, just your income and uncertainty. Markets feel expensive. AI is replacing jobs. Crypto crashes, then explodes again. Everyone online claims they're a genius. And you sit there wondering, did I already miss my chance? Here's the paradox. The best time to start investing feels like the worst time. And the worst time to start often becomes the best. So if I had to start from zero in 2026, no portfolio, no head start, no luck, this is exactly what I would do. Step by step. Every generation thinks they're too late. In 1999, people thought the internet boom made them late. In 2008, fear froze everyone after the crash. In 2020, markets collapsed, then doubled. History shows something uncomfortable. The market does not reward perfect timing, it rewards consistency. Here's a simple stat. If you miss just the 10 best days in the market over 20 years, your returns would be cut nearly in half. Not because you were wrong, but because you were afraid at the wrong moment. Investing isn't about predicting the future. It's about surviving long enough to participate in it. Think of investing like planting trees. You don't argue with the weather. You plant, you water, you wait. So how would I plant my forest in 2026? Step 1. I would build a financial floor before I build a financial tower. 3 to 6 months of living expenses, in cash, boring, safe, untouchable, because investing without a safety net is gambling. Step 2. I would automate everything. Not because I'm disciplined, but because I know I'm emotional. Every month, same day. Automatic investment, no debating headlines, no reacting to fear. Now here's where most beginners overcomplicate things. They chase hot stocks, they hunt for the next 10x crypto, they try to beat professionals. I wouldn't. I would start with broad market index funds. Why? Because instead of betting on one company, I'd be buying the entire economy. It's like owning a tiny piece of thousands of businesses at once. When innovation wins, I win. When AI grows, I grow. When the world expands, I expand. Simple, boring, powerful. Then, and only then, I'd add small exposure to higher risk assets. Maybe 5 to 10% in crypto. Maybe a small allocation in emerging tech. But never enough to destroy me. Because survival is the strategy. Now let's talk about the moment that breaks beginners. The first crash. And it will come. Maybe not tomorrow, maybe not next month. But it will. Your portfolio drops 20%, then 30%, maybe 40%. News anchors panic, friends sell, social media screams, it's over. This is the turning point. Not for the market, for you. Because investing is not a math test, it's a psychological test. Most people don't lose money because markets fail. They lose because they quit. They sell low, they wait, they re-enter late. If I started in 2026 and a crash hit in 2027, I would not celebrate, but I would continue. Because crashes are not the end of investing cycles. They are the discount season. Every historical crash, financial crisis, pandemic, eventually recovered. The real danger isn't volatility, it's emotional decision-making. But 2026 is not 1999. We have AI disruption, global debt at record highs, geopolitical tension, crypto volatility, automation replacing entire industries. So does long-term investing still work? Here's the deeper truth. Investing is not faith in governments, it's faith in human progress. As long as humans innovate, build, solve problems, productivity grows, and markets reflect productivity over time. But here's what I would adjust for modern reality. I would invest in skills as aggressively as I invest in markets, because your income is your greatest asset. If AI threatens your job, upgrade your skills. If industries change, adapt faster than the average person. Financial investing without personal growth is fragile. The strongest portfolios belong to people who increase their earning power, because higher income means more investing, more compounding, more freedom. And in 2026, compounding matters more than ever. Not just financial compounding, skill compounding, network compounding, reputation compounding. Money grows slowly at first, then suddenly. That's the quiet power most people underestimate. So if I started investing in 2026 from zero, I wouldn't chase hype. I wouldn't try to be a genius. I wouldn't wait for perfect timing. I would build a safety net, automate investments, own the market broadly, accept volatility, upgrade my income skills, stay consistent for 10 plus years. Because wealth is not built in months, it's built in cycles. And the uncomfortable truth? The biggest risk isn't starting at the wrong time, it's never starting at all. So here's my question for you. If markets crashed 40% next year, would you panic or would you buy? Comment below, are you investing in 2026 or still waiting for the perfect moment? Let's see who understands the game.